Welcome. In this video, where is Zbcn coin price getting ready? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. This downtrend, which is one of the notable technical structures on the chart, represents a very important decision point for investors. Because the fact that the price has been moving under this falling trend line for a while makes it clear that there is a certain pressure in the market, but this pressure is now approaching the breaking point. The reactions of the price, especially when the trend line is approached, both create buying and selling opportunities for short-term investors and give important clues about the long-term orientation. Therefore, a possible breakout of the current structure could be a precursor to new activity in the market. A downtrend line usually occurs when the price is constantly making lower highs and lower lows. Such trends indicate that the market has been in negative momentum for some time and sellers are in control. However, it is not possible for these patterns to continue in the same way. Every downtrend either continues or breaks at some point. In the current situation, the price is very close to the downtrend line and is moving as if it wants to test and break this resistance. This may indicate that buyers are starting to gain strength and seller pressure is weakening. There are some important details to pay attention to in such trend breakout possibilities. First of all, the number of times the price touches the trend line. The current chart shows that the price has approached the falling trend line more than once, and even pushed it with short-term sags. Each new contact means that this resistance is getting weaker and more likely to be broken. This is because the principle of the more tests, the weaker the resistance is often used in technical analysis. That is, the more often the trend line is tested, the more likely it is to break. From this point of view, the current structure may carry the footsteps of a potential uptrend. If the price breaks this downtrend with strong volume and a decisive candlestick pattern, this would be very positive for investors. This is because such breakouts are usually not limited to a short-term uptrend, but can also signal a larger trend reversal. Especially if the price manages to settle above this downtrend and make several closes above it, then the likelihood of a continuation of the uptrend becomes quite strong. Technically, such breakouts are usually followed by a retest. That is, the price returns to the trend line it broke and tests it as support. If this retest is successful, i.e., if the price manages to bounce back up, it would be a confirmation of the uptrend. In such a scenario, the market may open new positions for traders who want to participate in the uptrend. This is because a downtrend breakout is also a psychologically important threshold. This breakout strengthens the market's perception that the decline is over and encourages investors who were previously hesitant to buy to take action. This would have a positive impact on the price and could lead to a stronger bullish momentum. Moreover, this breakout could herald a positive transformation, not only in terms of technical analysis, but also in terms of investor psychology. In the current situation, the fact that the price is trying to break this downtrend shows that there is an accumulation of positive energy in the market. This energy could explode at the right time and start the upward movement of the price. If the strength of this move is supported by the increase in volume following the breakout, investors' confidence will grow. The potential of the current structure can be more clearly understood, especially when examining the rises that followed similar downtrend breakouts in previous price movements. Of course, like any technical structure, this downtrend breakout is not without its risks. However, when the overall structure is evaluated, the fact that the price is getting closer and closer to this trend line and testing it repeatedly suggests that the breakout is only a matter of time. But we cannot decide the analysis only with trends. Let's look at other metrics. Keep watching. When we examine the chart, we can clearly see that the price has formed a strong support at a certain level and has received a sharp upward reaction from this level in the past. Such support zones are considered to be very valuable and critical levels in technical analysis. Because when the price reaches these areas, there is a high probability that buyers will re-engage as in the past. This could result in both a short-term reaction rally and signal the beginning of a longer-term trend reversal. This support zone is a region that the market does not want to fall below, has worked as a safe haven, and is a region where the buying appetite is intensified. Especially considering how the price has previously bounced sharply upwards when it hit this support level, it is clear that this zone is still valid and is being carefully monitored by market participants. In technical analysis, support levels are known as areas where the price has failed to break below in the past and where buyers are concentrated. For this reason, it is quite possible that if the price comes to the same support zone again, it will receive a similar reaction. Moreover, such reactions are not limited to small bounces, but can sometimes lead to much more powerful and voluminous rises. Past price behavior provides the strongest clues as to whether such support zones will work or not. In the case we are currently analyzing, the price has moved decisively upwards when it has reached this level before, and has accelerated upwards in a short period of time. This shows that the support zone is not just an accidental stop, but also an area where market psychology is active, where big players are reassessing their positions, where buy orders are gathering. If the same level is approached again, the price is more likely to find support there again. In addition, such strong support areas are usually characterized by a concentration of liquidity. Large investors prefer such tested and consolidated levels to buy. Buying pressure at such levels can cause the price to turn upwards again. The concept of a support-resistance cycle is very important in technical analysis. The more a level is tested, the stronger it becomes after each test. In the current scenario, there are strong signals that this support level, from which the price previously bounced upwards, will perform a similar function again in the future. Such levels are also of great importance in terms of investor psychology. Investors who have bought and profited at this level in the past tend to open positions when they see a similar opportunity again. This increases demand in that area. If the price comes back to the same support zone, it may revitalize the interest of buyers. In particular, investors who have bought here before may reevaluate the same level for buying. This may cause new buying pressure in the support zone to increase and the price to make an upward jump. Such tests are quite healthy within the market structure. When the price comes back to a level where it was previously supported and rallied, it allows it to test the buying power there. If there is a strong reaction from the same level this time, this is interpreted very positively in terms of technical analysis. It's also an indication of how effective this support level is in the market. This contributes to the price not breaking this area easily again and creating a strong long-term basis. If the price comes back to this support zone and manages to bounce strongly from here again, this will reinforce the confidence of investors and further strengthen the bullish expectations in the market. This is because investors will start to think that this area is a safe zone and will continue to react positively every time the price approaches this area in the future. This supports rising bottom formations and enables the construction of a healthier uptrend. Looking deeper into the chart, there is a rather important technical structure that is noticeable in the RSI indicator. Currently, the RSI is approaching a certain level that has been tested more than once in the past and has had a significant impact on the price. This level has worked as a strong resistance zone on the RSI chart, and historically, the RSI data at this point has usually either pulled back sharply or experienced a strong momentum surge upon breaking this resistance. Therefore, the RSI approaching this critical level could be the start of a very exciting period for the market. Resistance levels on the RSI can be interpreted just like resistances on the price chart. If the RSI value manages to break above this level, it indicates an increase in buying power in the market, and potentially the start of a new bullish move. In particular, such technical zones are also of great importance in terms of investor psychology. Because many traders take RSI resistance breakouts as confirmation of uptrends and tend to increase their buying positions after these breakouts. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.